Good weekend, all. I'm Epstein, and here we are with your metal market wrap-up, and this wrap-up is for the weekend of April 5th, 2024. Well, the gold and the silver market's up sharply. Why then? Why not the copper market, the platinum, the palladium not up? Think of the war. What do I mean by the war? The world is nervous about how Iran chooses and when they're going to choose to strike because of the consulate that was hit in Damascus, all right? And the question is, and the U.S. warned Iran, the U.S. said it has nothing to do with it. They didn't know Israel was doing that. No U.S. intelligence was used on that. And it's a warning to Iran, don't overstep. But it's also saying, we know you're going to hit Israel. That's Israel's issue and yours. We'll see how Iran responds to all that, what they want to listen to or not. Are they going to do it by themselves? Are they going to use one of their proxies? Don't know. Israel's already jammed, as you know. The GPS began yesterday. How long it'll stay that way, I'm not privy to. They don't want to make things easy. And the army, all leaves have been canceled as the country braces for whatever the attack is going to be. Will there be a tit for tat? If there is, it's because Iran hits them very hard and causes more damage. So everything depends on the strike back, how Israel absorbs that, and if it also involves the U.S., because the U.S. will have to retaliate against whoever hits U.S. troops. So we'll see what goes on. But that is not the stuff that you're bearish on the gold on, and silver's jumping with it. Now, silver had its own good story today. What? Remember, today was the jobs report. And I felt very lonely because I have been one voice out there that says, I see nothing that said the Fed should make a move in June. In addition, I came out starting on Tuesday and I said, if you extrapolate the JOLTS number and the ADP number, how could you think this report is going to be bearish? All we're doing is adding jobs. Then the question came out during the week, who's taking these jobs? And the big word is migrants. The people coming over the border, where are they getting their jobs, who's paying them, things of that nature. Well, you got 303,000 jobs. Bloomberg estimate was 215. CNBC was, I think, 200,000, or they were flip-flopped. It's right in those two numbers for them. 3.8% unemployment, and you did not get an increase in yearly or monthly wages other than what was expected. So we expected a small gain, you got it. Why is it not jumping that much when you get that? Because these are most likely the lower paying jobs. I went in through my report today and showed it's the hospitality, the restaurant business, not industrial very much. People were thinking industry was picking up. Really not. Government picking up for certain. So that's what you've got when you look at all this. Now, when you come to the markets, you can see the bonds and notes. They're well off the lows that the market made. That doesn't mean they can't go lower, but that they didn't collapse on the news. That's important. We see the bids that you're getting in all this. That makes sense. I get the story that they're doing there. Dollar index, time for us to leave the march and say bye-bye to that. I just wanted to leave that on for this particular show for you to see it. So as we take a look now at the monthly closes of gold, right on up. This week, 4.88%. Why do I say week when this is a monthly chart? Because it's going to be the same here since this is the first week of the month. And both are up through the roof, as you can see. When we look at the chart action, well, the market broke out, went sideways, and now it's continuing in the run. You've got the higher lows, the higher highs in the market, all the key moving averages, the 200, the 100, the 18, they're under the marketplace. Where's the resistance? Well, you've been staying over it, which is the upper Bollinger Band. How long do you typically stay over it? Generally not more than 5 weeks in a row. So you're pushing the envelope right now. So be very careful. This market's going to need a piece of bullish action to continue on that spike, or you probably start fighting back a move to that 18-week average. To that the Bollinger Band on the weeklies. When you take a look here, you are in overbought territory. That doesn't mean that this market can't go higher. Try to imagine something catastrophic happening on Iran's hit back at Israel, whatever that word means. I'm not going into the millions of things that could happen in any manner. But that could kick it, and let's imagine nothing happens, or the retaliation is very moderate by whatever the world thinks moderate means. That could give the market a pullback because you're building in the worst case scenario. The gold-silver ratio, you could see you're back under the 18-day average where silver's gaining on gold. And silver just got over the Bollinger Bands. Gold's long in the tooth over it. And I know you'll say, well, it can just keep going. No, it can't. It'll catch up. This could be a huge base for the silver to go into the 30-plus level. This market is trying to break out of this base to the upside right now. In the copper market, you've got up and you're over the upper Bollinger Band and you're instantly overbought with it. In the platinum, this is a market, this and palladium, they're being dragged along. They're not the leaders by any stretch. So these are the most dangerous markets to buy. You want to be with the leaders. You don't want to be with the guys that are playing catch up. I've tried that in my career. It generally doesn't work. The trend is up, but you've got your first level of resistance at the 100-day average. Then the combination of the, as you can see here, the gray, 985.70 and 84.50, which are the 200-day average in the upper Bollinger Band. So that's where I think the cap, if you will, on the market probably is. And in the dollar, as you can see, we've got a market that is slipping back here, and it's got its resistance right at the 100-week average. That doesn't mean it can't go higher, but you've run into your first resistance point. I think the dollar wins by default, as I happen to think the European Central Bank is getting ready to tell the world that come June, they're ready to make their moves if the data stays as weak as it is, and the Bank of Canada might be ready to do that. So we're starting to see the lineup, and remember I told you there'll be a race. The U.S. is not part of it, not with this type of jobs report you just had. So I want you, if you don't understand all the technical terms I'm doing, get our guide to technical indicators. I have completed my new charting course. I'll talk about that next week. I'm giving my past buyers of it a chance to get it at a super discount, but next week it's available to all at another. It won't be that discount, but at a 1-week opening discount for a lot of people. And it's a great thing, and you take the course when you want to. But this is a primer because it teaches you so much as to what's going on. You can get this on our website. It is free at iraepstein.com. Under the keyword, go to the top left, free offers, or move your cursor right up to the top here, give it a click, and that'll take care of it. I'm Ira. You all have a great weekend. I'll be watching the women's basketball as I finish this. You have a good one. Take care.